Thanks for joining me here in my market report. My name is Mike, and this market report is on mortgage rates. We like to kind of go over what impacts them on a daily basis, kind of provide you some insight as to what's driving it for the day, and then what to look out for the week, and maybe give you some ideas or at least our thoughts on where they're going to be short term and long term. We don't get into rate quotes primarily because there's just too many variables that go into it. We would have a whole long video just based on that, and then of course each loan program has its own rates. They're not all the same. Um, but if you guys need rate quotes or if you guys are looking for that, a little bit about myself is I am a loan officer. I do work with a national lender, so we can certainly help you in any state. If you guys want to talk about rates, or if you guys are looking to refinance or buy, if you guys are just got questions about loan programs or anything related, please feel free to reach out. We'd love to be able to talk to you and see how we can help out. And so, without further ado, why don't we begin our report here? We'll start with the economic report. Uh, we only got one item here on the economic calendar, and that is the ISM non-manufacturing PMI. This is kind of regarding the servicing sector, and for the month of June. So in May, it had a really hot number at 64. Anything on this chart is anything on this index above 50 is considered expansion. So we hit record territory at 64 in the month of May. Forecast is supposed to be a slight pullback at 63.1, and it pulled back much more down to 60.1. So this kind of led to the markets kind of really kind of moved the opposite direction. So they're just kind of teetering a little bit, and then as soon as that came out, investors really showed their disappointment by stocks going further down. Dow was down over 400 so far this morning. They're kind of going more of a recap. We've been kind of hearing the same thing over and over, where uh, inflation is kind of subsiding a little bit. It's because the Fed's been talking about, and it's just due to the bottleneck in the supply chain, and it's very temporary. So investors and everybody else seems to have kind of eased a little bit about that and take it for what it is, that this will be temporary. We'll get through this, and hopefully by end of summer we'll see an improvement in our supply chain and get back to some type of normalization here. Uh, so, and then of course, with the vaccinations out there, people are feeling a little bit more secure on a global level that things are getting back out there as well. We did have last week a meeting between OPEC and their partner alliances. They did not come to a conclusion, so oil did come down a little bit, down to about $74 a barrel. So that helps with the pressures with inflation. So that's one reason why we kind of look at that. And of course, a lot of us go to the have to fill up our cars, so we kind of pay attention to those things as well, as we want to hopefully keep our gas prices lower. Let's jump and take a look at see how this is impacting the mortgage rates today, and it's doing great for mortgage rates today. So as you can see here, this was Friday. It got stopped by the 50-day moving average. It basically stopped between the 50 and the 100-day moving average. Today it just took off. We're up about 27 basis points, which will translate to a nice improvement in our mortgage rates. We should see at least 1/8% in our rate today based on this on 27 basis points. So this is obviously good news for those who are in the market for a mortgage. And yields are the opposite. I mean, they're doing the inverse, so they're dropping even further. We're down to about just under 1.37 after being in the 1.4s and 1.5s, which is obviously great news for us because that's adding a lot less pressure on mortgage-backed securities to keep them at a higher range. So we're seeing again probably some best levels we've seen almost before the elections. We haven't been to these levels since the election results back in January with the Georgia runoff is when things started worsening for mortgage-backed securities and yields. So right now we're getting some much better levels and some reprieve as a result of it. So great news, and hopefully that's good news for you guys that are in the market. All right, so if you guys remember, I'm here. If you guys got any questions, please feel free to reach out. We'll try to keep this short and sweet. If you guys do like these videos, I greatly appreciate if you can smash that like button. It certainly helps us out, helps the channel out, and get more knowledge out there. So you guys have a great rest of your day. Thanks so much for watching, and I'll look forward to see you guys in tomorrow's video. Bye-bye.